Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market update. And guys, what an interesting day in the market it was. Most of your indexes were severely red on the day and reversing into the close once again. That's now 2 days in a row where the bears gained short-term control in the morning, only to have the bulls reverse everything into the afternoon. Obviously, we had NVIDIA earnings, which appeared to have saved the market bulls once again when they needed it the most. So in today's video, we're going to be going over two earnings reports that I have for you guys. Number one's obviously going to be NVIDIA, and number two is going to be Etsy. Going to take a look into their earnings and see if the company is turning things around for the better. We're also going to cover our major technicals in terms of our index rundowns and our major tech names as well. So without further ado, guys, let's get right into today's video. So SPY actually up 0.09%, ending the day strong. You can see here, well, this is the NVIDIA after hour earnings, but tapering up nicely into the end of the day here, ending the day pretty much positive after a very brutal start to the morning. You can see this 3 o'clock candle erasing most of the losses intraday. QQQ still ending the day negative. However, one of our loss leaders as big tech did pull back over the course of the day, but everything performing nicely. Financials, healthcare coming back into the green despite being red on the early morning. If you take a look at our screener here in terms of your one-day relative performance, you can see fairly mixed in terms of big tech. Now, a few of these names were red prior in the day, namely in terms of Apple. Amazon held up gains all day. Google held up gains all day as well. The bottom half of the market performing fairly well indeed. That rotation continuing to be healthy. But as I said, guys, a lot of these names were red on the morning and turning things around nicely into the end of the afternoon. On the one-day relative performance, you'll see that it's a very different picture than yesterday. Everything pretty much ending in the green. Financials and technology still a little bit down, but on the 1 week relative, everything looking fairly good. Now, in terms of our earnings, guys, what do we have? Obviously, today we're going to be doing NVIDIA and Etsy, and then tomorrow we're going to cover potentially some names in the names of Mercado Libre. This doesn't get talked about a lot, but this company has extremely strong fundamentals and growth, so I do want to bring that one to your attention tomorrow. We're also probably going to be going over Booking Holdings and Intuit, a couple more of my favorite holdings here. They're not the most talked about plays, but very solid fundamental companies. And on Friday, guys, since there's not much in terms of this list that I want to report, we're going to do a couple that I might have missed over the course of the week. So let's get right into today's earnings preview. And starting it off with a bang, we're going to go through NVIDIA here. And NVIDIA, I'm a bit displeased with NVIDIA, but not for the reason you may think. They still haven't released their investor presentation. So usually we get a nice little investor presentation here, which is about 5,000 slides in terms of what the company is expecting. You can see it was a very extensive presentation that they put together last quarter of about 64 slides here, but I just don't have it for the quarter on the course of the day today. So that's a bit of a disappointment, but I did spend a fair amount of time here, knees deep in NVIDIA earnings reports, and listen to the entire earnings call with the CEO, and everything was fairly good. So we do have some notes here. Before we get into the notes, let me just present to you their earnings. So it was a double beat and raise on guidance. Nice little beat on EPS here, 12% to the upside, and beat on revenue expectations was 20 billion. They came in almost 10% above that, $22 billion, and raised guidance for the first quarter. NVIDIA only provides guidance on a quarter-over-quarter basis, not for the full year, but the results were fairly good. So before we get into some of these numbers here, let's go over a few of the notes from the earnings release. So NVIDIA posts record revenue up 265% on booming AI business. Now, this headline is a bit of it can come with a bit of confusion to it. Now, NVIDIA, if you guys don't remember, last year is when they launched their new data center processing division, which gave them an entirely new sales vertical. And you can see that that only really started coming into play as of Q2 2023. So now it's pretty much been a full year of reporting for NVIDIA in which they've been having those new sales metrics here. So as before, this company was largely known only for GPUs and retail GPUs. Now they have this whole new data center warehousing business that has a $2 trillion of total addressable market for by the year 2028, which is absolutely ridiculous, right? So let's get over some of the headlines here, and then we'll go through a deep dive in the numbers, let you guys know if I do deem the stock to be fairly priced, undervalued, or overvalued. Now, let's get into it right away. NVIDIA reported fourth quarter fiscal earnings that beat Wall Street's forecast for earnings and sales, and said revenues during the current quarter would be better than expected even against elevated expectations for massive growth. Now, NVIDIA said it expected $24 billion in sales in the current quarter, which is $2 billion up from this current quarter. Analysts were looking for $5 per share on $22 billion in sales. So there is your increase in guidance by another $2 billion on the quarter. The CEO, Jensen Huang, addressed investor fears that the company may not be able to keep up this growth or level of sales for the whole year on a call with analysts. This is what I was talking about on the channel, guys. It's NVIDIA's number one concern. Can they keep up the growth? Can they keep up the margins as they have been in the past year? And now here's what the CEO has to say about that. Fundamentally, the conditions are excellent for continued growth in 2025 and beyond. He says that demand for the company's GPUs will remain high due to generative AI and an industry-wide shift away from central processors to the accelerators that NVIDIA makes. NVIDIA reported $12.29 billion in net income during the quarter. Absolutely ridiculous net income, guys. Pretty much 50% net margins. This company, prior to launching this new sales vertical, their best years, they were delivering about 26-28% net margins. They've since doubled their net profit margins, over 50% at this point. Very, very decent. Strong demand was driven by enterprise software and consumer internet applications and multiple industry verticals, including automotive, financial services, and healthcare. So not just limited to big tech companies is what they're doing. Even automotive, financial services, and healthcare are getting involved in the AI boom. Very good diversification across a number of industries. Those sales are reported in the company's data center business, which now comprises the majority of NVIDIA's revenue. Data center sales were up 409% to $18 billion on a year-over-year basis. Obviously, well, last year, 5 quarters ago, they didn't even have this business. So measuring against the first quarter where they did do it, that's why they're up about 4x on that. NVIDIA said its data center revenue was hurt by recent U.S. restrictions on exporting advanced AI semiconductors to China. And Jensen Huang actually spoke about this on the call. We understood what the restrictions are, reconfigured our products in a way that is not software hackable in any way, and that took some time, so we reset our product offering to China. Now we're sampling to customers in China. So getting around the regulations, getting very creative with it is NVIDIA, and that is what you love to see, guys, pioneering on all fronts. The CFO said that while the company had improved supply of its AI GPUs, it still expected them to be in short supply, especially the next generation chip called B100, expected to ship later this year. Now, this line here is extremely important here, guys, because the product that they're selling now, the H100, that retails currently between $25,000 to $35,000 if you can get your hands on one. The traditional price that it should be retailing at is about $5,000, $6,000. But because there's so much demand, NVIDIA is able to jack up the prices by 4 or 5x because they can't keep up with production. But in the future, will that potentially be dropping off when demand finally balances out with supply? They have to reduce those prices of those H100 and even the B100 chips in the future. That could collapse your profit margins in expectation of supply meeting demand. Very crucial thing for NVIDIA to be watching out on. The company's gaming business, which includes graphics cards for laptops and PCs, was merely up 56% year over year to $2.87 billion. Very good. Graphics cards for gaming used to be NVIDIA's primary business before its AI chips started taking off, and some of NVIDIA's graphics cards can be used for AI. So we do have one slide here that they did included, and that's what I wanted to show you guys in terms of their graphics processing business, right? So here you have their data center revenue, which has absolutely exploded, guys, since the beginning of last year when they launched this service as a whole. You can see what a net increase it's been, pretty much 3xing since the start of the time where they really started ramping this up. Steady ramp from about 4.2 billion all the way up to 18.4 billion now. Here's their gaming division to give you guys an idea, right? So in 2023, they had a few mixed quarters as they were really coming down off of tough comparables from 2020 and 2021 when everybody was buying graphics card because money was cheap. It was after the pandemic. And you also had a lot of graphics cards being used for crypto mining, which has since stopped and stalled. So now you can see their gaming division actually had one of their best quarters, but still dwarfed in comparison with their data center revenue. Now, let's take a look at some of the numbers. Before we go through, what I want to bring through here, you guys, is that we're going to go through a bit of their numbers. But before we go through a bit of their numbers, let's see where we stand in terms of why NVIDIA is a market leader. So they are the industry leader for data center capacity here. They're a monopoly for now. This is why I put this in parenthesis. For now is very crucial because AMD and Intel, which do have common product offerings for data center purposes, well, they unfortunately have not yet brought those products to market. So currently, NVIDIA is the only person offering these services. AMD and Intel should be launching them over the next few quarters, but as of now, NVIDIA is still the market leader. It's one of a kind, but will other brands be able to take away a bit of their market share, or has NVIDIA potentially built too much of a lead? Well, that is something to be watching out for, but it's for sure the possibility, guys, that when AMD and Intel come out with their solutions, NVIDIA is going to have to drop the prices on their current offerings if they want to remain number one. So there would be potentially a little bit of margin crush. Number one, coming just from the cyclicality of the product, when their volume of supply starts meeting demand, your price decreases happen naturally. But when competition enters the market, price decreases happen as well, right? It's a race to the bottom in terms of prices. So that's why two factors for potential price reductions and margin compression on NVIDIA: competition entering the market soon, and number two is just supply eventually is going to be counterbalanced with demand. Now, they have massive margins, but for how long? That's what we just talked about. The refresh cycle is uncertain. That ties into my previous point that I was making in terms of the supply versus demand, right? So in terms of the refresh cycle, when a lot of these big companies, let's say Oracle, Microsoft, Google, and Amazon, when they will all have gotten their data center processing units up and running, well, how often will they have to refresh those H100 units that NVIDIA sells? Is it once every 6 months? Is it once every 2 years? Is it once every 5 years, right? So the incremental, it's like when graphics cards get released, right? The new version of graphics cards are always incrementally better than the last years. It's very rare that you get from 1 year to the next. It's like the iPhone, right? From iPhone 14 to iPhone 15, it's really, really incremental benefits that you get from the newer product. So will this be a problem as well? Once all the people will have gotten their data processing units from NVIDIA, will they just stop buying them for the foreseeable future? That as well is a bit of uncertainty here. And the valuation, however, is cheap if the analysts are correct. So if everything stays the same, if demand stays strong, if their margins stay high and stuff like that, right? Well, their valuation is cheap, but these are still big uncertainty factors. But as of now, if we keep everything the same, the valuation on paper is relatively cheap. Now, they just ended 2023 with an EPS of 12.97. It gives them an ending 2023 PE ratio for this quarter that ended today of about 56.2. Trailing basis a bit high, but look at the forward basis here, guys, and this is what's important to understand is the ramp of their EPS is very nasty. The ramp of the revenue is equally disgusting as well, in a positive light, of course. So their 2024 EPS is 22.15. Almost a double from this current year. 2024 PE ratio at $730, which is the current after hours price, is about 22.15. Not that high. About 33 price to earnings. It's just not that high in the grand scheme of things. But when you put this on a common denominator, which is referred to as the PEG ratio, that's why I love it so much. You'll see, guys, it's not that bad. Their EPS growth rate for the next 3 years on average is about 33%, which gives them a 2024 PEG at $730 of under 1. That's pretty good. And their 2026 PEG, if you go all the way out there and use this same 3-year average EPS growth rate, their PEG at the current price for 2026 growth, it's only a PEG ratio of 0.71. Anything under 1 is fantastic. Between 1 and 2 is still okay, but under 1 is fantastic. And their free cash flow yield is about 1.6%, returning $27 billion in free cash flow this past year that just happened, divided by their market cap is about 1.6%. So if you measure it on a free cash flow basis, they are fairly expensive here, but that's just because the market cap has grown significantly faster than they're able to grow free cash flow. So I'll give them a little bit of leeway here in terms of not having that best free cash flow yield. And we'll focus more on their PEG ratio because it is one of the main metrics when you're looking at a company that's growing this fast, right? So your PEG ratios are fairly low, but Let's say, for example, that the refresh cycle is a longer basis than they need. So once companies get their units, they stop buying units from NVIDIA, a new competition enters the market, such as Intel and AMD, which brings prices down, and it really reduces their margins as well. And when finally they have enough supply that they can counterbalance the high demand from big tech right now for these data center processing units, well, if all those three things happen and margins come down, right, and they have to charge less for their product, just reiterating pretty much margins coming down here, and their earnings growth take a little bit of a hit. Let's say that their earnings growth in terms of analyst expectations, it's now over 30%. Let's say it's half of what it is, right? If EPS growth is only about 15%, well, it's very, very easy math, guys. These these PEG ratios, you just do ×2 on them. And 2024 would put them pretty much at a 2 PEG, which is not that bad, right? Between 1 and 2 is okay. It's not terrible. 4 or 5 would be terrible. And 2026 PEG would only be about a 1.4, which is still not terrible. So even if their growth gets cut in half, their valuation is not that bad here, guys. And that's being said with the company currently pretty much at all-time highs. So can this company rally to $800, $900, potentially $1,000? Yes, it absolutely can, because the valuation does give it room there until some of these factors start materializing and slow the company down. So as of now, at least for the next 12 months, when growth is still going to be ridiculous and other competitors are not in the market yet, these valuations should still hold true, which means that the stock price for the foreseeable future, next 6 to 12 months, can indeed go up $800, $900, $1,000. And at $1,000, guys, they would have a $2.5 trillion market cap. They would be behind only Apple and Microsoft. So keep that in mind. Now, let's get into the nitty gritty of things here, and let's go through a few of their numbers. We're not going to spend too long on this, guys, because I've already summed it up pretty good. But just for viewership purposes, I just want to show you guys here. So here's what the CEO had to say. Another little comment: our data center platform is powered by increasingly diverse drivers, demand for data processing, training, and inference from large cloud service providers and GPU specialized ones. Large cloud service providers, guys, these is like Google, Amazon, Microsoft, Alibaba, names like that, Oracle, right? As well as from enterprise software and consumer internet companies. Vertical industries led by auto, financial services, and healthcare are now at a multi-billion-dollar level. So it just goes to show how diversified they are in terms of how to whom they can offer their products. Now, a few highlights that I did want to bring to you guys here. Take a look at this massive revenue expansion for the quarter that just ended for fiscal year 2024. Revenue, $61 billion as compared to $27 billion in last year. Extremely good increase in year-over-year revenue, 126%, right? Gross margins, very good, guys. Now, on the call, they did say that their current gross margins for the quarter are about 77%, and they could be tapering down over the next quarter to about 74, 75, but that's not that much margin compression if you ask me. Look at the operating expenses. This jumped out to me. With almost, right, this is a 126% increase in revenues, right? So 2x, over 2x, 2.5x almost revenue increase. Look at the increase in operating expenses. Only 2%. That is absolutely insane. Just goes to show you they have extremely good cost control, and scaling this new vertical really doesn't cost them that much money. So it allows them to bring a lot of that money to the bottom line here. $33 billion in operating income, net income, $29 billion. And if you take that in terms of 29, let's say 29,760 divided by your 60,922, that's net margins of 49%. Keep an eye on NVIDIA gross margins. We'll show them to you right here. I'll move myself over. You can see here on a quarterly basis, before they started ramping this, the best they could do is mid 20 to high 28%, 23, 28%. Look, since they've launched this business, 45%, 51% the previous quarter, and now as a year-over-year totals, guys, year-over-year totals, right? That net margin at about 48%, absolutely insane, if you ask me. Now, a couple little highlights from their data center. Launched in collaboration with Google, optimizations across NVIDIA's data center and PC AI platforms for Gemma, Google's groundbreaking open language models. So, new collaboration with Google. Expanded its strategic collaboration with Amazon Web Services to host NVIDIA DGX Cloud on AWS. New partnership with Amazon. Announced that AMZN will use the NVIDIA DGX to power insights into drug discovery, diagnostics, and precision medicine. So here is your healthcare play, guys. A lot of beautiful things. And here's an automotive announced further adoption of its NVIDIA Drive platform with Great Wall Motors, Zeekr, and Xiaomi using Drive Orin to power intelligent automated driving systems, and Li Auto selecting Drive Thor as its centralized car computer. This is for applications for self-driving. So very important, guys. They're trying to make a play on full self-driving, a bit like in Tesla. So that is going to be very, very interesting to keep an eye on. Now, a couple little numbers that I did want to show to you guys as well. So here we're going to have a linear breakdown of their exact numbers. So we've already went over the revenue and the cost of revenue, right? So cost of revenue really not going up in a tremendous fashion in relation to the massive bump that they had in their overall revenue. So that's good. Operating leverage is extremely positive. Their R&D not up that much as well, right? On a year-over-year basis, even with this new sales vertical, and their sales, general, and administrative expenses, even with this new line of business, guys, they don't have to do a lot of marketing. They're the industry leader and everybody knows it. So very good to see that they still have efficient operating expenses, all well, 2xing their revenue. That's very, very, very attractive indeed. Now, let's take a look at their current assets here, guys. So you'll see that cash and cash equivalents, the receivables, inventories, and prepaid expenses. Cash and cash equivalents, guys, $44 billion. Now, this company never really had a big problem with debt as a whole, right? But it just goes to show in the most recent year, any potential concerns that someone would have had with their debt have been absolutely obliterated as a whole. So if you can see here, they were coming into the year with about $12 billion worth of debt at the end of 2022. And now look at this, guys. They maintained that debt, bought it down a little bit. Last quarter ending about $11 billion in debt, but they're making so much free cash flow now on a quarter-over-quarter basis. And that's what we're going to break down here. Right, we're going to break down their free cash flow a bit lower. So their total liabilities now, their long-term debt after this quarter is only about $8.5 billion only, and cash and cash equivalents now is sitting at a cool $26 billion. So completely eradicated any problems that they potentially would have had with debt, even though it was relatively low. And stock-based compensation is not that bad, guys. As a percentage of revenue, right, we're looking for pretty much under 10%. So you can see here, on the 12 months ended basis, right, $3.5 billion in stock-based compensation, right? So 3.5 billion is really not that much. 3.5 divided by your 60.9, right? It's only about 5.7%. So fairly low stock-based compensation. So that is definitely not a problem with the company. And here you have massive free cash flow, guys, on the year, $27 billion of free cash flow on the year, which is their best free cash flow year pretty much ever, right? So absolutely phenomenal by the company here. And one last thing I'm going to talk about is the share buyback. So in the fourth quarter, they utilized cash of 2.8 billion towards shareholder returns, 2.7 billion of share repurchases, and 99 million in cash dividends. In 2024 as a whole, they run one fiscal year ahead. So this past year, they almost used $10 billion of shareholder returns, which is $9.5 billion of share repurchases and 395 in cash dividends. So as they increase their cash flow, they keep buying back shares. Let's call it $10 billion in share repurchases with this market cap is not that big. So $10 billion, divided by 1670 roughly, which is 1.6 trillion. It's only about, 0.5% in share buybacks, but at least they're using 45% of free cash flow to do that. So if free cash flow continues increasing, they'll continue buying back stock roughly at a 1%, per year basis. Now, that's obviously not as high as some other companies, but it just goes to show that they're utilizing cash to bring some of that back to the shareholders. So in terms of the company, as that's pretty much everything that we had here, guys. So hopefully that was helpful to understand a bit what more NVIDIA does and if they're moving in the right direction. So there are a few uncertainties here. However, through 2025 at least, the coast is still clear, and the CEO reiterated that on the call. So these valuations into next year at least should stand. The stock does still have time, does still have a bit of room to move. One thing is for sure, guys, if we get a dip back into the $600 level, even I will be buying, because at 2025, for 2025 estimates, everything seems to still be pretty good. A lot of growth ahead of the company still. I would not mind buying even at $600, guys, to potentially ride this up $800, $900, $1,000 would not be surprising for the stock. However, I would be lying if I told you that this is going to be an easy double or an easy triple, guys. Probably not the case from here, but still some decent upside to be had on NVIDIA. No red flags at all with the company. Just a few things to be looking out for here over the course of the next year, but nothing that requires immediate attention. Now, let's move into our second company, which is going to be a bit Etsy, a bit easier to understand, in my opinion here. So Etsy had earnings after the close here, and you can see Etsy dropping almost 10%, right? Down about 8% in terms of after earnings here. Now, the company is trading relatively cheap right now in terms of its stock price, but what we want to determine is it trading cheap in terms of your fundamentals? So we'll take a look at that after we go over these earnings, right? So in terms of the company, they had a little miss here on EPS by about 20%, so fairly negative read in terms of that. Now, the revenue did go up about 2%, so a bit of a mixed read. However, one of the reasons for the drop was a miss on guidance. So let's take a look at exactly what happened to Etsy. Etsy stock is dropping on earnings miss, slow start to the fiscal year. Etsy stock fell 8% in extended trading after the company posted a quarterly earnings miss and warned of a soft beginning to its fiscal year. Now, Etsy executives cautioned on a soft first quarter revenue, but said its results should improve. Gross merchandise sales for the first quarter of 2024 is currently estimated to decline in the low single-digit range on a year-over-year basis, executives said in a letter. This guidance reflects our slow start to the quarter and our current expectation that GMS, gross merchandise sales, for the core Etsy marketplace improves as we move through the rest of the quarter as a result of our planned product and marketing investments. However, if our trends fail to improve as we currently expect, this could become a mid-single-digit decline. So instead of a low single-digit decline, like 2-3%, mid-single digit, 5-6% potential if it doesn't play out as expected. But the company is relatively cheap here, guys. At $70, I actually may give Etsy a little bit of a chance. On a technical basis, we're really bottomed out here, pretty much bottoming out to pre-pandemic levels. This area, $70 roughly, has been acting as fairly decent support ever since the 2022 sell-off into last year as well. And even this year too, the 70 area has been proving to be fairly resilient support. Now, in terms of the valuations of the company here, guys, EPS is still growing at an attractive level. Let me show you that on the chart right now. So you'll see that we do have EPS growth consistently through 2027 at a rate of about 15-16%. That's very good. We also estimate that revenue is consistently going to increase in a double-digit range as well. So very good. No problems with the company as a whole in terms of EPS and revenue expansion. The forecasts are good. Now, in terms of your debt, does the company have a lot of debt? Well, they have about $2.4 billion of debt, which is not that much. They do generate free cash flow, which they use to repurchase shares on a yearly basis. Not so much debt here, guys. We were coming into the quarter with under $1 billion of cash and cash equivalents, but this company, in terms of the revenue that they make on an annual basis, right? They're making about $3 billion in revenue. So, in terms of revenue to debt ratio, that's not that bad, all things considered. The company is still growing quickly, so I don't deem this amount of long-term debt to be a net problem for Etsy. The problem for Etsy is going to be, will consumers continue flocking to their marketplace and continue their online sales purchase trends, right? So let's look into a little bit of the numbers. If Etsy can give us some insight into whether or not the consumer is still content with their platform. We're going to go over this fairly quickly here. So by any measure, Etsy is a much more meaningful e-commerce player than just a few years ago. So we have more buyers. Pre-pandemic, 45.7, now up to 92 million buyers. That is a 2x in just a few years. Very good. Pandemic did a great job to bringing them exposure. Buyers are spending more with Etsy. So 2019 total gross merchandising sales per active buyer was only $103 per person. Now, trailing 12 months, every person that goes on Etsy in 12 months usually spend $126. So every customer is spending more. Buyers are shopping with Etsy more frequently. So in 2019, you only had 41% repeat buyers, and now up to 48% repeat buyers. We've become more of a habit as well. So 2019 habitual buyers, 2.5 million, now up to 7.1 million habitual buyers. So all metrics point to the customers really enjoying Etsy's products and services as a whole. Now, after many years of overperforming our sector, it's been challenging to reaccelerate growth in a tepid macro climate for our type of goods. What type of goods are they, guys? Discretionary goods, right? When we talk about recession, high interest rates, people cutting down on spending, well, Etsy is going to be the unfortunate recipient of that reduction in discretionary spending. So you can see 2022 and 2023 has been really tough to match up with their comparable sales that they had after the pandemic and even leading before the pandemic. But this just goes to show, guys, that when times are good and the consumers do have money, they really like shopping at Etsy. So this is good. So the company is caught in a bit of cyclicality like the rest of the market, right? Nike, Starbucks, McDonald's, a lot of different companies have said this. So nothing wrong with the actual business, just a little bit of cyclicality. Now let's move further down into more of their numbers and I'll show you guys what I like. Now, we have some Q4 consolidated financial results here. So you can see on a quarter over quarter basis, they are increasing or at least maintaining gross merchandise sales. They have increased revenue fairly well over the past year as well by the tune of about 21%. Very, very good. Now let's move down into a couple more graphs here. So Q4 EBITDA was higher than any quarterly period. So very good that they're bringing more money to the bottom line in form of earnings, up to $236 million. Very good. You can see here the EBITDA margins roughly remaining the same. A little bit of a decline here, but nothing too much, and still netly up from your pre-pandemic levels. That's what you want to see. For the full year, Etsy Marketplace product development delivered $1.5 billion in incremental annualized GMS. This is very important, guys, okay? It just goes to show that the company has operating leverage. Now look at this. Consolidated Q4 23 product dev spend reflects modest leverage. So you can see this increase in product development spend for the company, not that much on a year-over-year basis when we compare against quarters, right? So product development as a percentage of revenue is actually declining a little bit. So the revenues are going up, but their expenses are staying roughly the same. Very good for the company. Positive operating leverage, right? That's one thing. And here we go. Here's another one, important one. Growth in revenue per head count for the Etsy Marketplace since 2019. This is the money they make for every single person that they employed in millions of dollars. So now every employee translates into $1.3 million in revenue, a 60% increase from 2019. And this does not include the reduction, this little line down here, this does not include the 11% workforce reduction that Etsy announced in December 13, 2023. So a couple months ago. So this number should increase even more. Just goes to show you that when times are a bit more difficult for Etsy, they're doing a good job of cost control. They've laid off employees and everything now is translating into higher net margins. That's exactly what we want here, guys, for the company to recognize the state that it's in right now and implement the correct change. So very, very good. Drove billions of dollars in incremental gross merchandise sales from our marketing investments in 2023, while also delivering 10 basis points of leverage. So very good, guys. Annual marketing spend, you can see it's going up, but as a percentage of revenue, it's actually declining. So once again, operating leverage, right? Their lines of expenses are staying relatively the same while their revenue is consistently increasing. So that is very, very good. That's just a few amount of slides that I wanted to show you guys. So here, active buyers reach an all-time high, right? 92 million active buyers. Very, very good indeed. Habitual buyer trend line continued to stabilize sequentially. Number of repeat buyers ticked up slightly. So here you have your habitual buyers, people that buy, every now and there. Are habitual buyers rather are the buyers that buy like on a regular basis. Excuse me. So you can see those are slightly down pretty much here. But in terms of the repeat buyers, so these are the consumers that purchase once and then twice and 3 times. Not as good as habitual buyers, but still repeat buyers. They upgraded a larger portion of our prior year repeat buyers to habitual buyers in Q4 versus Q3. So very, very good. You can see here the buying trend is fairly strong. And now we have a capital light business model, delivers a healthy balance sheet and strong cash flow. So cash balance at the end is $1.2 billion. As I showed you guys, the amount of debt that they have is not that bad. So now they have cash and cash equivalents of about $1.2 billion. And you can see the debt that they had as of the most recent quarter is about 2.4. So about half the amount of debt they already have in cash and cash equivalents. That's good. And they did generate in Q4 about $283 million of free cash flow, which is very, very good. Etsy's returned a significant portion of free cash flow to shareholders through share repurchases. Another good metric here, guys, right? So share repurchases as a percentage of free cash flow, you can see high amount of free cash flow they're giving back to you. In this most recent year, 87% of all the free cash flow has been used to buy back shares. Very, very good indeed. Now let's take a look at a few more of their numbers here, guys, and we'll leave it off at that. So just going to taper off. Just going to go back to the top here. Do I have anything for you guys? Yeah, so this is pretty much your active, sorry guys, a bit of a misplacement here. So active sellers, you can see nice little increase here. Active sellers, 21%. So more and more people using their marketplace to sell items. But here we have a little bit of a slowdown here in the active buyers, only up 1.5%. Once again, I deem this to be, and the CEO as well deems this to be, a little slowdown just because consumers have less disposable income. But it's nice to see at least that there's more active sellers on the marketplace. When the active buyers picks up, those active buyers will have more of a product selection. So that's very good. Just goes to show that the marketplace is growing from the inside out. So very, very decent by Etsy here. So here you see some of your operating expenses, right? Here's what I wanted to show. Revenue grew 7% year over year. Their marketing expenses only grew under 7%, 6.9%. So a bit of operating leverage there. Product development, 13.6%. But as we saw in the slides, it does, even though this product development went up by 13.6%, it does represent a smaller percentage of their revenue on a year-over-year basis, or at least keeping constant. So that's okay. And their general and administrative expenses up by about 10%. So not the worst at all, not extremely good. They still do have some good cost control, and I expect their employee restructuring plan is going to bring these general and administrative expenses down a little bit more as well over the next coming quarters. Now, stock-based compensation, the last thing I wanted to show you guys, really not that bad here, guys. I mean, it's not the best, right? But it's not all that bad. It's about 10%. So stock-based compensation, you can see here, it's about $284 million, and they made about 20 divided by, 2,748. So their stock-based compensation as a percentage of revenue, it's only about 10%. So not that bad at all, if you ask me. Now, in terms of their valuation, guys, I would be willing to give Etsy a chance down here because I do believe it's the bottom of the cyclicality cycle. It's the bottom for cyclicality for the company. Company is at a very decent area of technical support as well. And in terms of the valuation, guys, it's really not that bad. EPS growth, 15.8%. 2024 EPS estimate is 2.67. Earnings per share. That gives them a 2024 PE ratio at $71, which is the price in the after hours here, of about 26.59. Not all that bad here, guys, on a relative basis here, guys. You can see in the previous years, right, since going public, their PE ratio was always above 40 since they were growing very, very fast, 40, 50, 60, right? And ever since they've been slightly tapering back here, their PE ratio is sitting at a cool, mid 20 range, which is not that bad. It gives them a 2024 PEG of about 1.68, which once again, not too bad at all. Is it an amazing deal? It's not an amazing deal, guys, but it's worth a nibble. The business is fairly stable, in my opinion, should be able to recover quite nicely as well. So I would not be opposed to making a little bit of a swing trade here in the $70 range. If it dips down into 60, I do believe that it's even a more beautiful trend here for Etsy to be able to potentially regain some steam in the later part of the year. But it's not going to be a fast trade, guys. Really don't expect anything substantial like this, right? But if you buy in the $60 range, I would not be surprised once the markets do turn around for this type of consumer discretionary stock. Well, I do believe that Etsy should be able to recapture the 80, 90, potentially even $100 level relatively easily, guys, without it hurting the valuation tremendously much. Are we going back to all-time highs? I would doubt it for quite some time, but getting it in the mid $60 range to potentially target $90 is really a fairly good risk to reward trade here, guys. We're talking about, 35, 40% upside, and the downside risk, in my opinion, is not that great. So that's pretty much everything I had for you guys in today's earnings. Sorry for spending so much time on NVIDIA, but it's one of the most important stocks in the market, guys, so we have to understand it. Now, let's get into our technicals right away. So, SPY, up 0.09%. What were we looking for here, guys? Well, tomorrow is going to open a lot more green, undoubtedly, if these NVIDIA gains hold up, right? So SPY, we were looking to protect the daily uptrend. We were saying if we lose 491, you set a daily downtrend. What already set a daily downtrend? It was QQQ. So SPY, we were on the watch here for it, but with tomorrow's price increase from NVIDIA earnings, may just maintain a tightening range here. And if we break through these tops, 503, it is daily uptrend resumed as if nothing happened. Now, can NVIDIA potentially save the markets, save seasonality, and delay seasonality for another week, or potentially just continue grinding higher off of this renewed optimism in tech and AI? Very probable, guys. Very probable. We'll just have to see what the price action takes. I am still fairly biased for a little bit of downside into end of February and early March as well. But NVIDIA, this most recent catalyst, may just prove to delay that consolidation a bit more. So as of now, still waiting whether or not the bulls are going to lose this level, set the daily downtrend, and end into extended consolidation or not. Keep in mind, guys, NVIDIA's earnings, right? NVIDIA's earnings has happened a few times whereby they've had earnings and dropped off thereafter. You can see here, they had earnings last quarter. Last quarter was decent, dropped off thereafter, however. The quarter before that, decent earnings, lasted for a couple of days, somewhat flat, then tapered off sideways, right? And I even have it on QQQ, where are NVIDIA's earnings? So you can see the last quarter of NVIDIA's earnings didn't move QQQ that much. Only a few weeks later was it able to rise, unrelated to NVIDIA. Here, it actually helped the markets in August, but you know that August and September were very bad months. The market just fell off a cliff thereafter. And here was your crazy quarter for NVIDIA, where NVIDIA really pumped a lot into the market here when they first announced this massive earnings increase that they were going to have over the next couple of years. That really helped. But the past couple of quarters, guys, they haven't been able to single-handedly save the markets. So it remains to be seen if they can do that today. Now, QQQ, we're still looking out for this continued daily downtrend. Now, if we, for some reason, right now we're trading at about 431 in extended hours. So 431 is right about here, right? Right about this line right here. Still looking for the potential lower high, lower low continuation. If we crack 435 over the course of the day tomorrow, we've engulfed the daily downtrend. It creates enough space for the bulls to potentially reset this to a daily uptrend, which would really end this weekly consolidation and potentially send us up for another little last leg here on to weekly higher highs. So how this week ends is going to be crucial for the markets, guys. I really want to see tomorrow and Friday's trading because it could give us some great indications if the bears are going to step in, set the lower high, and just go for lower low continuation and continue this seasonality, or if NVIDIA's earnings are enough to reignite bullishness into the market temporarily and give us a little bit more upswing to the upside. I am still in defensive mode nonetheless, guys, not taking anything for granted after 4 months of rally. Now moving on to XLF financials. XLF financials, them and healthcare, guys, never really losing your daily uptrends like QQQ, right? So financials extremely healthy. Daily uptrend is being maintained. Just currently looking for a higher low. Anything currently above 38.42, just looking for a higher low for daily trend continuation. And we were pointing out here, guys, this previous resistance, which is now support, and your confluence right here of your 12 EMA. The bulls using this as support, just setting the daily higher low, potentially moving on to higher highs. And weekly uptrend, guys, is still extremely healthy. No sign of slowing down. Overbought conditions, yes, but you can see on the lower time frames here, guys, especially the 4 hours, not losing the 4-hour trend just yet. If you see a 4-hour downtrend manifest, that's when you know you're in for heavier daily consolidation. That's when you look out for the potential daily downtrend. But as of now, bulls very healthy. XLV Healthcare, same thing. Beautiful daily uptrend right now. After today's trading, higher low could be set, right? We were into an hourly downtrend into today, and now looks like the bulls want to engulf. If we continue this hourly uptrend to the upside tomorrow, your daily bounce is continued to be underway, and then we look to the previous all-time highs, 146.62, just to continue this daily uptrend. Bulls are in full control, no red flags, similar to XLF, bouncing nicely. Previous resistance, current support, and confluence with your 12 EMA. Look how well they've defended this 12 EMA. XLF is just the same. Daily 12 EMA is the guide on these two indexes as a whole. So until we lose that in a significant fashion, XLF and XLV will continue to provide rotation for SPY if ever QQQ falters. Now, IWM Russell still muted, trying to save this daily uptrend, right? So currently looking to protect 193.29. Lose 193.29, you lose the daily uptrend. You open the door to then set the lower high using this entire area of resistance, this red box, as potential resistance here on the daily shift lower, and have set the daily downtrend. That would just mean further extended weekly consolidation in a tightening range. Now, the good thing is that tomorrow with NVIDIA earnings, IWM may get a little bump. If you want to see this chart really continue bullish to the upside and generate substantial gains, we need to see a break and close above 201. You can see the previous times that it happened was barely closing above, and the next week it just retraced to the downside. I need to see a clean break and close above, retest using it as support, confirming it as support, then you will really start to rally off to the races. In my opinion, guys, that really won't happen before the month of April, potentially end of March, April, when we get a bit clearer guidance on when these rate decreases are going to happen. When we get a clear path of expectations for rate decreases, the Russell will start outperforming everybody. But until with that time, and as long as we still have continued uncertainty in terms of rates, it's going to be very tough for the Russell to just start going up leaps and bounds because they're so heavily tied into interest rates. As of now, bulls playing relatively good defense, not losing the daily uptrend, but just keep an eye on this low right here and keep an eye on the weekly close above this area for one direction or the other. Now, lastly, Dow Jones. Dow Jones again was negative on the day and ending the day positive, rallying at the close pretty much after an extended sell-off from yesterday's trading. So Dow Jones still looking for the tightening range at the top. Key level 38,000 pretty much. Lose 38,000. Daily downtrend is set and you will have your first weekly consolidation mode on the Dow Jones to the downside in quite some time. Now that being said, 12 EMA should be your guide, same as those other less volatile indexes, right? So we need to follow the Dow Jones. The 12 EMA is going to be key. Obviously, if we break the 52-week highs, well, your daily uptrend is simply maintained at that point, right? But it's very nice extended consolidation at the tops right here. It's allowed for a heavy cool down of the RSI over the past month or two. The weekly, however, is still overbought. So even if the Dow Jones does continue consolidating sideways, tightening range, it'll just be good to cool off your weekly RSI as a whole, set this beautiful weekly bull flag right here, and continue on to higher highs. No red flags whatsoever for the Dow Jones just yet. So across all of our indexes, guys, the only one that presented red flags was QQQ in setting the daily downtrend. We'll see if they can reverse that into tomorrow and Friday with NVIDIA earnings. But the rest of the market, no red flags. Daily bulls still in full control. So that sell-off is still not here. It started off a little bit, but this NVIDIA, if NVIDIA would have missed here today, guys, I really think we would have been for extended consolidation over the next couple of weeks. But NVIDIA may just have delayed that ever so slightly. And now let's take a quick look at yields before we move on to big tech. So yields still just hovering, guys. You can see the 20-year yield here still hovering about 4.582. So weekly uptrend is still in motion by the bulls here. Still a little bit of uptick to the upside, but I maintain my narrative, guys. This will not last forever. As soon as we get a bit more confirmation on the timing of the rate decreases. The rate decreases are all but a certainty right now. It's just getting the timing correct, right? So these yields should come down. Yes, it's a weekly uptrend, but we're just looking for the monthly lower high and lower low. Since yields have peaked right now, we're not expecting further rate increases, and they will be coming down this year, 100%, right? 100% certainty, that is. I'm expecting the yield crush to continue over the course of the year. So even though we have a little bit of temporary upside, I expect this upside to be fairly muted. Yes, can we move a little bit higher? Sure. Can we move back up on the 10-year to 4.5 potentially with a few bad news headlines and a bit of a market sell-off? Sure. But are we going to go back to the previous all-time highs or previous 52-week highs on yields and really start eclipsing those? Guys, I really don't think so. I would be extremely surprised if that happens. That's why I'm positioned accordingly, ready to just get this monthly lower high and lower low drop and really start this declining cycle over the next couple of years. Now let's move on to big tech. So Apple muted on the day once again. Apple, same thing we've been waiting on here, guys. It's really a loss of your 180 level. If you lose in 180 and close below, the bears set the daily downtrend, set the weekly downtrend as well. And at that point, you're just going to be in extended monthly consolidation, still monthly consolidation at the top end of your range. And this whole green box right here is going to be very beautiful support. It's the previous all-time highs for Apple, and it's your previous area of consolidation all throughout the nasty consolidation period, August, September, October of last year. So I do expect 180 all the way down to about 167 to be providing some very good support, even if we break down some of these daily timeframes lower and the weekly timeframe lower as well. This is a tremendous buying opportunity zone for Apple. I don't think the bears are going to get much further than that. So I'll be looking out for that. If you want to see a bounce here, guys, if you want the bulls to regain short-term control, what we need to look out for here, guys, is the size of the bounce right here, right? So if the bulls want a healthy bounce, need to see a bounce at least to the 618. That's about $187. Why? Because if you bounce up to 187, you create enough space to eventually be able to reset the daily uptrend and break above these two yellow lines, which is the big area of overhead resistance for Apple. So that's what the bulls need to see. As of now, bears still in control. If we get a very weak bounce on this hourly, right? So hourly trend change potentially in motion into tomorrow. But if that hourly trend change is soft and lose it by next week, right, which create a small daily bounce, and then we may shift back to lower lows. At that point, the lower lows may just become inevitable daily downtrend continuation, and we're in to our big area of support where I will be continuing to play heavy Apple options. So Apple, not looking the worst, but the bulls still have a lot of work to do to recapture those lower time frames. Now moving on to AMD. AMD, right, down a little bit on the day, but tomorrow should open fairly positive from NVIDIA news. You can see in the after hours, AMD coming up almost 5% off of that news. So now back above into the 170 zone. So keeping in mind your 170 zone, we're right back up here, still in a big range of consolidation using previous all-time highs as support, right? So that being said, we're still looking for the weekly higher low. As long as we can't confirm a new daily uptrend, this is still extended weekly consolidation, but it's looking like a big weekly bull flag right now, right? Very nice consolidation here. Could be using this area for a potential next stab at further all-time highs. But I'll remind you, AMD, is still about a quarter or two away from delivering their competitive product that they're trying to deliver the same as NVIDIA, right? So keep that in mind when looking at AMD valuations. Valuation's still a bit high for me until they do release that product. That being said, the technicals are definitely looking good for the bulls here, guys, right? Weekly bull flag, would not be surprised for some further upside if that were the case here, but playing some very good defense. Just need to see a recapture of the daily time frame here. But AMD, bit too rich for me, guys. My trade zone for AMD is really if we break down and start retesting these 150, 140 levels personally. Now moving on to Amazon. Amazon still consolidating sideways here, so still not losing the lows. We were watching out for a loss of 165.75 yesterday. That would be daily downtrend into further weekly consolidation. But now the bulls just consolidating sideways after earnings, using this 12 EMA as playing good defense here. Still a little bit of a gap to be filled from post earnings at about 159.31. So we still have that on the technicals, but as a whole, guys, Amazon looking very, very bullish, right? Weekly uptrend confirmed. We're just looking for a weekly higher low, anything above 145, weekly higher low for further trend continuation. The area that I'd be targeting, this 12 EMA on the weekly, 159, which funny enough, coincides exactly to the earnings gap fill. So if the markets continue pressing downwards over the next forthcoming weeks, I will be looking to make that play here in the lower 160, 159, 158 range for Amazon. Everything looking very good. Monthly bulls, full control as well. So still dealing a little bit with earnings and obviously our overhead resistance here. Once we're done weekly consolidation, the next move is taking us to the all-time highs, overhead resistance 177, and then you have your 187 all-time high. So no red flags on Amazon, just very healthy sideways consolidation. Now moving on to Google. Google as well, fairly healthy consolidation, up 1.15% on the day. We are looking for Google to potentially reset the daily uptrend here. So we're caught in this tightening range here, right? After losing the daily uptrend, lower low right here, size of the bounce was very good, created enough space for the bulls to set the higher low for potential daily uptrend reversal. Well, now we're looking for that. We'll see how high this daily move gets, but if it doesn't get high enough before losing your hourly uptrend, right? So hourly uptrend will continue. As soon as you lose that hourly uptrend, it marks the end of your daily move higher. If we just continue into a tightening range, that would be just fine for Google. Google, anything pretty much above 141 to 138, big area of resistance, big area of support now for the stock. And that's where the stock has been consolidating into for the past 2-3 weeks. 3-4 weeks pretty much ever since earnings. I love Google 140 to 138. Easy play in my opinion. Google on a forward PE basis, on a trailing basis, about a 24. Forward basis is about a 22. Very cheap valuation. I like the stock in this price level. That being said, if we do set the lower high, roll over, that would be daily downtrend. It would be potentially a weekly loss of your lows as well around the 138. Then we'd be looking for further monthly consolidation, but that would really even send us only into about the mid 130s. Before this monthly 12 EMA comes to play here. So all in all, guys, Google, very good buy. Even if we drop below 140, I'm still highly interested in buying Google. Now moving on to Meta. Meta looking good as well. Sideways consolidation since their earnings. So no clear technical pattern as a whole, guys. Just $500 is going to be your psychological resistance, right? Break of your 488. We just reset the daily uptrend in motion. Sideways consolidation has been good. Look, the EMA has had time to catch up to the price pretty much after sideways consolidation. Best case scenario for the bulls, lowered on the RSI right now. On the weekly, however, the RSI is still a bit rich. So even though we've been consolidating sideways for 3 weeks, Meta weekly RSI only red flag in my opinion, but the business is looking very good. Weekly uptrend is extremely powerful at this point. Weekly bull flag is in motion. So even if we were to drop the levels a little bit, guys, this still would just be a tremendous buying opportunity for any long-term bulls. I'm personally looking out anything around. If we can come down to the 420 level, I'll be extremely interested in Meta. That would be a drop of roughly 13-14% from the expected highs. If that happens end of February into early March, guys, I'm definitely looking to play some Meta down here. Where it is currently, guys, a bit tough for me to buy. Currently expecting that market consolidation. So that's why I'm being a bit more protective. Now moving on to Microsoft. Microsoft as well, right? Microsoft losing the daily uptrend. We were talking about this yesterday. Microsoft, one of the only names to lose the daily uptrend here in relation to all the rest of big tech. So that being said, daily downtrend, you're into weekly consolidation for week number 2 of Microsoft at this point. Anything pretty much above 365, just looking for a weekly higher low for further trend continuation. Keep an eye, 12 EMA is going to be the first line of defense. We're talking about 391, and then it's pretty much this previous area right here that start getting into the 380 level. So just keep an eye on that. One thing's for sure, if we do pull back here into the 380 level, I would be looking to play some short puts on Microsoft. Anything below 380, 378, all the way down to about 368, extremely juicy area for some short-term swing trades on some options. If Microsoft pulls down to at least the mid 380 zone, then we can target these for some short puts. So Microsoft looking good. Daily bears in control of the short-term timeframes, but it's just healthy weekly consolidation. Now moving on to Netflix. Netflix consolidating here on the day as well. So we're kind of getting nervous now at this point. Will Netflix be able to mount and hold above its infamous 575 area of resistance? Well, the bulls are trying desperately to protect it here, guys, right? So after this earnings, we had a bit of a daily downtrend. That was just a weekly bull flag, right? Weekly consolidation, just looking for the furtherance of the trend to the upside. We got it now with this most recent move up, but be careful. Dangerously close, right? Under 575 again now. If we take back too much of this move, it opens up the doors for the bears to set the daily downtrend in motion and just continue further weekly consolidation, which will just lead into a bit of more monthly consolidation for Netflix. If that happens, I'm very happy to make plays on the stock. Anything 520 and below, I will be highly interested in playing some short-term short puts on the stock, and would be even considering adding some long-term shares to my portfolio as well. Netflix looking good. Bulls still in control. Just remains to be seen. Can we reset the daily uptrend higher low using this 12 EMA and really crack above and mount above this 575? Or will the market potentially reverse over the next couple of weeks and bring us back under below and present us with a nice buying opportunity? One thing's for sure, your bulls are in control of all time frames. Daily bull control, weekly bull control, and monthly bull control as well. No red flags. Now, NVIDIA. So if we go against all of this data we pulled out, how are we looking at on the technicals here, guys? So we were just looking out right on the daily pretty much. We had a beautiful daily uptrend going, but NVIDIA lost the daily higher lows right here, 696.75. So we're looking, can the bear set the lower high into lower low? Well, obviously you guys know the stock is now trading in the after hours about 735. So we're really back up here. So now at this point, guys, the bulls have engulfed all the move. Now, what are the potential factors for NVIDIA, right? If for some reason earnings are discounted and then we run into lower lows, it would just be further weekly consolidation at this point. Anything above 475, extremely healthy weekly consolidation. And I'll tell you guys, if we somehow reverse this earnings move tomorrow into the forthcoming weeks and start dropping significantly and start dropping all the way back to this 12 EMA right here, around $600, that is where I'm looking to pick up NVIDIA myself personally. But there's always an opportunity for the bulls right now to really V-shape this entire move, creating enough space now, right? Especially if we're at 730, 740 right now in the after hours. It's a V-shape engulfing move, creates enough space, set the daily higher low for further trend continuation to the upside. At that point, your weekly consolidation would have barely lasted for a couple of days before we're on to weekly leg number 2 after breaking out of this whole area of accumulation. So NVIDIA looking good, but personally, guys, I'm sitting on the sidelines on this one. I need to see a bit more consolidation for me around the $600 level, right? Very tough to take a breakout trade at these levels, considering the seasonality that we have. I know their earnings were good, but it's just not the type of trade that I personally take myself. Now, before last one's Tesla. So Tesla performing okay on the day, 0.52%. They were as high as about almost 200 on the day, pulling back ever so slightly. We're just looking for this daily uptrend to hold up. So we really need to protect 182. Daily uptrend is nice. Need to set the daily higher low for further daily uptrend continuation. We will see if they can really start reversing this. So we had the daily pullback, right? And now over the course of the day, we're trying to reset the hourly. So you notice, right? From the bottom, hourly trend change. That's your daily move, right? Daily leg higher. When the bears take control, they take control of the hourly trend. Then when the bulls recapture the hourly trend, you're looking for the bounce. So I need them to maintain this hourly trend change past our previous recent highs of about 204. You will continue the daily uptrend, potentially all the way towards the gap fill from post earnings at about 208. Now, on terms of the weekly, that would give us good daily trend continuation. But in terms of the weekly, the bounce still would not be sizable, guys. On this weekly, to potentially reverse this weekly downtrend, we would need a bounce, guys, at least to 220. At best, 230. Get me up to 230 on this bounce here over the forthcoming weeks. Well, the bulls are set up nicely to reverse this potentially into the second part of the year, weekly uptrend, and really start reversing this monthly downtrend as well. So far, so good for the bulls. But as usual, guys, if the market falls apart here and we head lower, I will be playing Tesla 180 down to 170. Massive horizontal support, the bottom end of our downtrending channel here as well. I like the confluence down here, and the valuation down here, guys, really becomes more reasonable as a whole. So just keep that in mind on Tesla, still trading in this little range right here. Now, moving on to Palantir. So Palantir looking fairly good in the after hours, was up significantly because Jensen Huang of NVIDIA probably said the word AI over 5,000 times. So I guess Palantir shareholders were listening. So we got a nice little bump here in the after hours by about 5-6%. Absolutely huge. So Palantir, just keep an eye on these short-term timeframes here, guys, right? We were looking for the daily trend change to the bears at this point, right? Daily downtrend was set after the double top, and we were looking how far down will they go. We were targeting this area right here, 2150 down to about 2050, which is the lower end of your previous range in 2021 and is your previous 52-week high. So this should be your new area of support. And we were saying if ever Palantir just continues this daily downtrend into here, it would be a good weekly buying opportunity for the breakout into this zone now, retest the lower end of the range, and potentially rally. So looks like we didn't get all the way down to here, only got as low as about 22, 24 on the day here today, before rallying 6% in the after hours after NVIDIA earnings. So at this point, guys, the bulls are looking good. If we're currently sitting in the after hours at about 24 right now, this would mean that you've recaptured a decent percentage of the move from your most recently set daily downtrend, creating a lot of space. Now, can the bulls just recapture this, reset the daily uptrend, and just send us to new weekly highs? Well, they have a potential, guys, but always keep in mind seasonality. The reason that it's tough for me to estimate if a lot of these stocks are going to just continue into their weekly momentum phase is because end of February, and even March, guys, is not known to be the best time for the markets. Usually that's when we consolidate. That being said, the bulls are set up nicely across all these patterns. I just don't know if there's going to be enough momentum in overall markets and overall sentiment to really make all of these stocks crush through their highs, right? I'd love to see Meta just confirm on this weekly bull flag as it should and move higher. But seasonality is the one thing holding me back from having a more bullish outlook on the market as a whole. Now we'll see if NVIDIA earnings change that tomorrow in terms of sentiment, but that's just how I'm feeling personally. All in all, guys, Palantir bulls in full control, need to reset the daily uptrend. If we set the higher low in the forthcoming days, I'll be looking to play more aggressive puts down here below $22. Now moving into PayPal. Lastly, PayPal 57.48, down almost 2% on the day, coming dangerously close to the lower end of our level right here. $60 to $57 is the area that I keep saying we cannot lose on PayPal here, guys. We would ruin the longer term structure. That being said, your daily bears are in control at this point, right? Almost setting the daily downtrend in motion. If we flush through 57 tomorrow, guys, it'll be very much daily downtrend confirmed at that point. And at that point, guys, if we close the week as well below 57, it's not looking good on the short term for PayPal. Need to protect this. We're at the verge, right, of losing your weekly uptrend. Weekly downtrend would not be confirmed. That would really be lower high, lower low. That would be worst case scenario. We got so close to breaking out of the cycle of this extended downtrending channel that we've been in pretty much since 2022. If you want to go even more, guys, you can even extend it. I know it doesn't follow it perfectly, but you can even extend the amount of sell-off, right? It's been relatively maintaining these levels for pretty much the past 2 years at this point, right? It's been extended drawdown. So until PayPal can really go against the grain and smash this area to the upside, talking about 62, 63 at this point, until we can confirm this weekly move higher, it's going to be tough for PayPal to really get some momentum going. So I need to see them do it soon. Dangerously close to losing this area. One thing's for sure, if we do lose this area and plunge into the 55s, I'll be looking to aggressively play 55 all the way down to roughly $52. Seems to be an extremely juicy area. That's when the valuation really becomes ridiculous. That would be an extra 10% down from here. It would put their forward price to earnings at about a 9 at that point, 10 or 9. That's when the valuation really gets irresistible in my opinion. So even if we do break to the downside, yes, it sucks for upwards momentum, but just represents a good buying opportunity. So that was everything that I had for you guys today. Right? We're going to be ending these long form videos. These videos are usually very long when we do earnings, guys. I got criticized on last quarter's earnings a bit for only reading the articles. If you guys remember, earnings used to only take me about 3, 4, 5 minutes per company. I used to present you a few financials here on TradingView and then just read the article summarizing the earnings. And then people said, well, you should look into the earnings calls. And the funny thing is that I always read the earnings calls, right? But before, you know, we were only doing a little bit of short form. So I figured, you know what, let me do a bit of more long form content into earnings. So hopefully you guys have enjoyed that little shift of me spending a bit more time on the earnings. Always, guys, since I put the timestamps in the videos, you can always fast forward if you don't want to see a specific company and just go into the technicals if you like. But I really appreciate your viewership and I appreciate you for bearing with me as we go through these channel changes. And I try to find the best middle ground for everyone while still providing a lot of valuable information and my opinion in terms of valuations, right? So hopefully that's been an insightful video for you guys. If it has been, consider dropping a like on the video. That's a real sign that you can show to me that you appreciate the content. If you have any suggestions, obviously, clearly leave them down below in the comments. I'm always open ears to whatever you guys have to say. If you're new to the channel, consider subscribing as well. We do these videos Monday through Friday, and we do videos on the weekends as well in terms of the top 5 options plays for the week. And I obviously always show my portfolio on the Monday and Friday videos. And as a whole, guys, if you have any questions, any comments, please leave them down below. Anything you want, I'm always open to you guys. If you want me to look at a specific earnings that I missed, maybe a specific stock that you're looking at and you want my opinion on it, if you're looking at options plays and you're not too sure how the pricing works, anything at all, leave it down below, and it'll be my pleasure to answer you within the first 24 hours. So take care, guys. I'll see you tomorrow after the close. Happy trading tomorrow and for the rest of the week. Peace.